Be Wealthy and Smart, episode 1408.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about inflation came in lower than expected, which is making the Fed look like they made the right call. This is according to the PCE Price Index report, a measure that the Fed uses to measure the cost of goods and services in the U.S. economy, and it rose 0.1% for August, putting the 12-month inflation rate at only 2.2%, just 0.2% above the Fed's 2% inflation target. Excluding food and energy, core PCE rose 0.1% in August and was up 2.7% from a year ago. The all-items inflation gauge was below Wall Street estimates and the lowest since early 2021. This shows us that inflation is moving in the right direction, and the 0.5% rate cut that the Fed made is looking like they did the right thing at the right time. That is quelling fears that the Fed was easing rates because the economy was falling off a cliff. Chris Larkin, Managing Director of Trading and Investing at E-Trade from Morgan Stanley, said, "All quiet on the inflation front. Add today's PCE price index to the list of economic data landing in a sweet spot. Inflation continues to keep its head down, and while economic growth may be slowing, there's no indication it's falling off a cliff." The progress in August came despite continued pressure from housing-related costs, which increased 0.5% on the month for the largest move since January. Services prices overall increased 0.2%, while goods declined by 0.2%. Of course, the interest rate cut was the first time the Fed had eased since March of 2020. And recently, Fed officials switched from fighting inflation to an emphasis on supporting a labor market that has shown some signs of softening. At their meeting last week, Fed policymakers indicated a likelihood of another 0.5 percentage point in cuts this year, and then a full point reduction in interest rates in 2025. But traders are expecting even more aggressive cuts than that. PIMCO economist Tiffany Wilding said, "We've come on a string of pretty good inflation readings over the last several months, and that was coming after an acceleration in inflation the first quarter. So I think Fed officials are feeling pretty good about where inflation is sitting." According to Chairman Powell, the upside risks to inflation have really come down. The downside risks to employment have increased. And because we have been patient and held our fire on cutting, while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals. So everything still looks good for a soft landing. It does not give us any more indication of a recession. So the recession fears are unfounded at this time, and the housing market should reignite as these low interest rates spark more buyer interest. And that goes right along with my theory of a peak in real estate prices somewhere in 2026. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.